a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi everyone, welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about precious metals ETFs. And we know that Russia-Ukraine crisis continues to weigh on investor sentiment. This crisis has supercharged a rally in many commodities, and we have talked about energy commodities, agricultural commodities in past few videos. Metals like palladium, aluminium, and nickel, they have also seen a sharp rally because of supply disruption fears, and gold has seen a rally due to its safe haven status. So in this video, we'll focus on gold and palladium. So gold, as I mentioned, is a safe haven asset, and it is now trading over $2,050 an ounce, the highest level in many months because of this rising geopolitical uncertainty. Gold is also seen as a hedge against inflation, and a spike in inflation. Inflation was already high before this war started, and this war is likely to drive prices higher further because of supply disruption. So some investors are seeking refuge in gold, and due to it being an inflation hedge, and gold has also benefited from a sell-off in cryptocurrencies because last year many younger investors had pivoted to Bitcoin, which they viewed as digital gold. But we have seen that Bitcoin and cryptocurrencies have not provided a hedge against inflation or rising market uncertainty. Now, I should add that higher rates dim the appeal of gold because they increase the opportunity cost of owning this precious metal. But while real rates have started rising, and in fact, they have come down a bit because of this crisis, and because of rising inflation, real rates are likely to stay in negative territory, that is after adjusting for inflation for quite some time, till inflation cools down. Now, palladium has surged because it is used in catalytic converters to curb emissions, and 40% of supply of this precious metal comes from Russia. So that is the reason it has seen a very sharp spike. Now, physically backed gold and palladium ETFs are the best way of investing in this metal. They provide safe and low cost, convenient exposure. Now, if you are a trader, if you want to hold gold for a short time, you should look at the largest and most liquid gold ETF, which is by State Street, ticker symbol GLD. It has over 65 billion in assets and has an expense ratio of 40 basis points. Each share represents about 1/10 of an ounce of gold. Later, State Street introduced a cheaper and smaller version of gold ETF. It is the mini trust, ticker symbol GLDM, and just a couple of weeks back they further reduced the expense ratio on this ETF, and this is now the cheapest gold ETF with an expense ratio of just 10 basis points, has over 4.8 billion in assets. Very popular, this too, but not as liquid as GLD. So this is the best ETF for holding for longer term. Now this has a smaller handle too. It represents 1/50th of an ounce of gold. Now let's take a look at these ETFs by going to the quote pages on Zacks.com. So this is GLD. So this represents, as I mentioned, about close to 1/10 of an ounce of the precious metal. You can read our research report and articles, and using the link, you can go to the quote page, State Street web page, but there's not much to see. This holds physical metal in actual walls. For GLDM, again, you can read our articles, etc., and go to State Street webpage, and you will see that they just reduced, just a couple weeks back, reduced the expense ratio, making it one of the cheapest physically backed gold ETF. Now, if you want to invest in palladium, there are not many options. The Aberdeen Standard Physical Palladium Shares ETF, ticker symbol PALL, is the only physically backed palladium ETF available to US investors. It has an expense ratio of 60 basis points and has 495 million in assets. To learn about this ETF, you can go to Aberdeen webpage. I just wanted to show you the volatility in palladium. So this is unlike gold. This is not a safe haven asset. This could be very, very volatile. So be a little bit careful if you want to invest in this metal. Now, on the last slide, I have the comparative performance versus the S&P 500 index. Palladium, you can see that sharp spike lately in the past couple of weeks since the crisis started, and it is now up over 65% year to date. The two gold ETF, they track the price of gold very, very closely, and their performance would be similar. They are up about 11%, whereas the S&P 500 index is down more than 12% year to date. Thanks for watching. Make sure to check out zacks.com/promo for an interesting offer, and also make sure to subscribe to our videos, our video channel, so that you do not miss anything. And I will see you next week.